Hello everybody, welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get going, if you would, we'll do a quick systems check. If you're hearing me clearly and seeing my screen all right, go ahead and type OK in the chat box. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know. As always, keep in mind, no one trade is guaranteed to profit. I think we all understand that. In one way or another, you should manage the risk on the trade. Each and every trade has a level of risk to it. You can largely control that with your trade size, your stop loss mark, maybe using a special feature like AvaProtect. But you should have a risk management plan that makes sense for your goals and your risk tolerance. And then at the same time, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick, for anyone who's new to things, we get a mix of traders in terms of experience in the webinars. Real quick, before we get on the live charts, what is technical analysis? Basically, it's looking back at the historical movements on the charts, the price charts. Usually the type of chart would be a candlestick chart. And the candles represent the different price movements over time. And basically what you're doing is looking back at those charts, looking for patterns that may lend some predictability to them in terms of price levels and movements and trends. And hopefully that helps you predict a little better in terms of the future movements. Now, there are manual ways to do that, which is what we tend to lean on in my webinars, so that you actually have to learn the strategy concepts, learn what a support level is, a resistance level, a breakthrough movement, a trend line, etc. So those manual methods we'll use within the trading strategies that we cover. And then obviously we can add indicators. You can use indicators on your charts, and basically those indicators are programmed to look back at the same candles that we are looking at. And the indicators are looking at the historical movements, trying to predict what will happen in the future, the same way that we can do. Only I like to believe that we're better than the indicators, because we can actually combine the technical analysis with what we also understand about the day's fundamental news and which way we believe the wind is blowing, so to speak, so that we can have a preference in terms of which technical entry points we like and which ones maybe could be false signals, which many times the indicators are unable to do that part of things. If you have any questions, any input you want to give as we go along, please do so in the chat box. I'm happy to answer questions or share information if it's pertinent to what we're talking about. Now, this is our WebTrader platform, and really I want to start on our main website here. And to get to the WebTrader, you'd log in here. Before we get to the platform and our mobile app, I want to see which way the wind is blowing today, as I was suggesting makes sense to do along with your technical analysis. So although we're going to focus on technical strategies in just a moment, let's understand what's happening in the headlines. And so if I go to some major news sites that maybe you go to for headlines and information, you can see right away that it was positive sentiment today. Wall Street buoyed by signs of progress in Russia-Ukraine peace talks. Okay, well, that's good news, and the markets were green all day in response to that. And we see the volatility index is down slightly. That's been the case pretty much all day. US dollar index down, so the US dollar gave back some ground to the other currencies. As fear dies down, the US dollar being somewhat of a safe haven currency, folks feel better leaving the US dollar and buying back into the stock market, the indices, etc., cryptocurrencies as well. Any instruments that are viewed maybe as riskier but safer when the fear is down. So we saw the US dollar weaken and these other instruments rise up. The non-safe haven instruments like the stocks, the indices, and cryptocurrencies. And so this is the fundamental outlook that we can see real quick. Kind of positive sentiment, somewhat lowered fear on the volatility VIX index. It's referred to as the fear index or the volatility index, and that's down with the weakening USD and the markets being in the green. All of that aligns to confirm positive sentiment. And so then we look at another headline from another source. Russia promises to scale down operations near Kyiv and North Ukraine or northern Ukraine. Some of that may be because they're reaching some peace agreements, which they had some talks today. Other parts of that could be strategic, maybe pulling back because they weren't able to achieve objectives in certain areas. But whatever the case may be, it's being viewed as positive right now by the markets, these headlines. And so it was pretty easy through the day today to pick the direction on these different instruments. You know, oil went rushing up with fears of supply disruptions with this war that's been going on. And if there's easing fears of there being supply disruptions because maybe there's going to be peace, then it makes sense that oil then would come back down. And that's what we saw. So predictable. Gold also, if gold is a safe haven when there's fears of inflation on energy and other products in relation to the energy, then gold goes up with that fear. And as the fear kind of went away today about the war situation, which then relieves some of the fear of inflation of energy prices, then gold also came down a bit, predictably. And so these are things that if you look at the fundamentals, it was kind of set from the morning. We could see what the fundamentals were. Then you just do your technical analysis, finding the entry points that make sense for the direction you already believe the movement will go. And so if gold was spiking up to a resistance level, you'd say, okay, sell with today's news. And if it was pushed down to a support level, you might say, you know what, I don't trust the support level because I expect maybe gold to drop or oil to drop or whatever it is that you're talking about that you feel like you know the direction maybe it should go. Okay, so you do the technical analysis, but you're smarter than just blindly following signals that might be coming out of an indicator that says oil dropped enough, it's oversold, buy. And if it goes up, the indicator tells you sell. And if it goes down, it tells you buy. Many times this is the case with different indicators. With enough movement in one direction, it tells you the instrument is overbought or oversold, and it tells you to go in the opposite direction. Whereas if you understand the fundamental news was so strong in one direction, you know with your own manual technical analysis, you're going to trust half of those signals in one direction, but the other direction you might not prefer to trade, knowing the current fundamental news. Okay, and many times that can improve your success rate in terms of winning trades and losing trades. So let me expand the view on the mobile app here, and we'll put it on full screen. And if you're looking for help with your technical analysis, the app and our web trader are a good place to start. And you can trade on your MT4 and MT5 accounts using this app and also using our web trader. It has all kinds of special features for managing risk and helping you with technical analysis, signals, etc. So what we'll look at by tapping on this little tab down here is a menu where we can then find some advanced features from Trading Central, which is really a paid service, but it's free for all of our AvaTrade traders. AvaTrade covers the cost of it. And so we're looking at Market Buzz brings you fundamental news on stocks. We won't do that today. We did that in the last session on fundamental analysis. Featured ideas and analyst views, these bring you signals, detailed technical analysis. And so let's click on analyst views. And it'll bring up signals, time-stamped, and the times are not so important that they have to be in the last hour or in the last 2 hours, because it gives you price levels that the signal is good until. As long as it's within the right price range and hasn't broken the support or the resistance, it outlines everything for you that what moves could be good. And so right now they're saying GBP USD is under pressure. So the USD weakened today a bit with the fear dropping. But we all know that the US is planning to raise interest rates potentially 4, 5, 6 times this year to stave off all the hyperinflation. So if the US dollar weakened today, which is what we saw, all the positive sentiment, the US dollar index dropped as the fear went down, perhaps you've got a nice entry point where the pound has gone up against the USD, and now the signal's telling you that there should be pressure for the pound to drop now against the USD. So understanding the short-term fundamental news is why maybe the pound went up against the USD, but then understanding the longer-term fundamental news that interest rates are probably going up multiple times this year in the US and already went up once. That tends to strengthen a currency, by the way, as interest rates go up. So then you might say, okay, fundamentally, I can understand why this might be in a good spot to go with the pound now, and also why the USD might strengthen back up, even though the fear has lessened a bit today. So then you find a signal that makes sense to you fundamentally, and then analyze the technical analysis. So I'm going to click on GBP USD, and it shows you as long as it didn't break above this price, which is an old support level, support, then it became resistance and resistance again. And so they're saying as long as it didn't go up and break above this resistance level, the old support level, then they're saying you should sell. That they believe the pound will be pulled down against the USD, that the USD will strengthen again after some of the weakening that occurred. So you're looking here and you're saying, okay, as long as it didn't break above here, which would establish an uptrend, then I can sell on this based on this signal. And the take profits are the red lines here, the suggested take profits. So you see our preference. By our, I mean Trading Central, the analysts at Trading Central. The preference is short positions, which means sell, as long as the price is still below 1.3360, that's this resistance level. As long as it's still below there, they're saying you can sell with take profits at suggested prices of 1.30 and 1.2850. That's these two levels here. Now we could look at the live chart now, and maybe it already came down, or maybe it's teetering around up here below this resistance level, and you say, wow, I want to sell on that. Looks good. Or perhaps it already came up, broke the resistance, which would have then hit your stop loss on your if you did the sell, and then now you're in on the alternate scenario. The alternate scenario here is listed that if the movement does go the wrong way on the preferred move and goes past this resistance level, then that establishes the uptrend, and you can have a pending order waiting to buy right above this price level with take profits at the next price levels that are deemed resistance levels going up. Okay, you see that's a great resistance. So they're saying if it does break above this resistance, then the next take profits are up this direction near the next resistance levels. So that's the way these signals work, is you can do a market move on the preferred direction with your stop loss on the other side of the kind of the fail-safe line. And if it does go the wrong way, then you have a pending order also ready for the opposite direction. Okay, so if you like one of the signals, you think it makes sense, that the price levels are outlined there for you nicely. Nice support resistance levels, and it breaks down the strategy for you for preferred move and alternate scenario. Any questions on the technical analysis in the signals or anything else to this point? You can go ahead and type in the chat box, or just type okay if you're with me so far. All right, I don't see any questions popping up. I've been told the chat box is hard to find from your side, so if you're having trouble finding it, you're not the only one. What we could do is go back, look for more signals. And by the way, the signals come in on cryptocurrencies and standard Forex pairings. Not everywhere has cryptocurrencies available. Most places do, but there are some regions like the UK, Canada, that we work with that you can't trade on cryptocurrencies. So you can just ignore those signals if they're showing for you. I'm going to leave the app and let's go to the web trader. I want to show you the rest of the features that are also on the app, but are in the web trader as well. I want to show you on the full screen also, so you get a feel for both the app and the web trader. So if we log in here, then we are in the web trader, which we saw when we first were getting going here in the webinar. Now, we can look at that GBP USD. Let's bring it up on the full screen. And so, by the way, if you're wondering, it says sterling dollar. That's just kind of the nickname for the GBP, the sterling. And it's against the dollar, meaning the US dollar, not the Canadian. But if you're confused by that, you can see over here in the order window, it tells you GBP USD. Now, let's get off the 1 week candles and go to something smaller to look at today's movements. And we see indeed that signal was dead on. Because if we look at GBP USD, it went up as the dollar, US dollar weakened today. And then look, this was that level up here that it said if it went above, maybe you bail out. This resistance level up here, look how it reversed off of that. This was the old support, support became resistance, and the movement came up, resistance, and straight down. So just as we were thinking over the last, and we saw that signal came in like 2 hours ago, 2.5 hours ago. So if we go back 1, 2, 2.5 hours, this is where it was when the signal said sell. There was that resistance. If it broke above, it was saying buy with your take profits then up here, but it never broke through, did not signal the buy, the backup move if you had a pending order, and the initial signal came all the way down near the take profits that were listed. Okay, so it was a very, very nice signal. If you were watching those as they came in, the timing was really good 2-3 hours ago when it came out. If it was still hanging around up here, it's okay if it's 2 or 3 hours old. As long as it didn't break past the price level, then the signal would still be valid. Okay, so this did exactly what we thought. And again, you'd say, why trust this resistance to sell off of it? And the answer would be, we know there are multiple interest rate hikes promised in the U.S. coming at, they even said at every FOMC meeting the rest of the year that the U.S. suggested they will raise interest rates. And so they've already raised it once this year. And so that's keeping the US dollar strong. And so we can see as the US dollar weakened and gave up ground, as soon as it hit legitimate resistance level, old support becomes new resistance. Once it's broken, as soon as it got near there, right back down. Okay, now the question is, what do you do after that? If we go to 4-hour candles, we can look and say, okay, the support level really is down here on the 4-hour candles where these lines are drawn. And that's where the take profit marks were, if you remember, in the signal. It gave 2 suggestions. One was about where it is now, and another one is down near this lower support. Okay, so it hasn't gotten there yet, but you might say, well, it's a little late maybe to get in on this movement or not. It's certainly established a downtrend. So if you think it'll push clear down to this support level down here, then it's got another 64, 65 pips to go before it reaches the 4-hour support level. So it hasn't gotten there yet, and you certainly could sell on it if you believe the momentum would continue to carry it. But that's just an example of a signal that came through maybe exactly how you would expect. Let's look at something different. I'm going to search gold. Since gold is moving with fear and inflation fears and supply chain fears, and we see here on the 4-hour candles, let's go to 1 hour, that gold came down quite a bit, as did crude oil, right? As the fears went away, but then the realization maybe comes in that, well, there's still a lot of hyperinflation out there, right? There's still a lot of inflationary fears. It does help that there's potential peace agreement being worked on and more seriousness with potentially the war situation backing off. That helps ease the fear of oil prices flying up any further, and so it eases some of the inflation fears. But if you remember, there were high inflation fears even before this war started. So not all the inflation fears are gone. So this was an opportunistic dip. If you were paying attention earlier today to buy the dip, which if you look at this support level down here, look how almost perfect. This was an old support on the 2-hour candles. It bounced up from, and you see today it hit that price level almost exact and right back up. Okay, so this was a spot that would have made sense to have a pending order to buy from. And there's your technical analysis. You didn't have to wait for this movement to occur. You could have looked back on the 2-hour candles and said, okay, I see that if the price does drop to here, that might be a spot to have a pending order to buy from with my stop loss maybe $4 or $5 below that. And here it went, it barely tested it, broke it by a hair and right back up. You'd be in the money nicely. Okay, now you might say, well, okay, that's all well and good, but I didn't do that earlier today. And now it's a good $16, $17 above that support level already. It could push back down, right? If the US dollar starts to strengthen, gold could be pulled down further, but you're thinking, boy, there's still inflation out there and maybe gold will go up. So maybe you're confused. And maybe you have a feeling more that it'll rise further, but you don't want to risk all this distance because the stop loss is so far away now. So guess what? We have special risk management that you don't have to use a stop loss if you don't want to. You could start out with AvaProtect. Protect it by the hour, by the day. And by the way, let me show you before we do this. We'll go to the history. This was a trade we used on the 22nd. That was 1 week ago. So last Tuesday, I do the same webinar each Tuesday. We looked and the same situation was there. We bought on gold and we put AvaProtect. Okay, if we look, the protection cost $481. The profit ended up $1,408. So overall, it was about $1,000 profit on that move. And I only had to risk the cost of the premium. In this case, if we use AvaProtect. So let me go bring up gold again. And let's click buy on gold. And by the way, you could sell on gold as well. I'm not here to tell you which way you should trade, but I want at least for you to understand how you can do these strategies using the tools that we have and trying to have a little bit of fundamental reason for what you're doing. So we understand why technically this would have slowed where it did. Because if we look over, that's an old support level. If I drag this line down, here's an old support level. Support up, support up, support up, support up, support up. It broke below, and now when it came rushing back up, it has trouble breaking that price point. Okay, especially with the good news about peace negotiations maybe, and less fear of inflation of energy prices, then maybe gold's having trouble breaking this mark. But maybe you think probably things aren't going to go perfect in these negotiations. Maybe you think bad news will come before more good news. And then that's going to renew this fear of increasing oil cost and increasing inflation fears. And so you take a gamble here, and that's really what trading is, right? A measured gamble, educated guess, you could say. And then you want proper risk management, and you hope you're right more than you're wrong, right? Or right enough that you profit. If your potential profit's greater than your risk, you actually can profit without being right more than you're wrong. You can be wrong 60% of the time and right 40% of the time and still profit if you set it up in a way where your potential profit's larger than your risk. So in this case, let's say we're going to use AvaProtect because the news is a little mixed. Okay, there's reason for gold to drop. That's why it dipped. But there's also a large global reason for gold to go up as well. So there's a reason why gold dropped, a reason for it to go up that's even maybe more global in terms of inflation fears. And so let's say you err on the side of the global inflation fears maybe still being there, and say, I'm going to protect this though. And maybe I protect it by the day like that last one example that I showed. And so we go after a certain amount of potential profit. And let's say you know that you're willing to risk losing X amount per trade, and whatever that is for your risk management plan. So I'll make up a number and say I'm willing to risk 500 per trade. Maybe I have a balance of 50,000 and I want to risk 1% per trade, whatever the case may be, whether you're risking 0.5%, 5% per trade, whatever it is. So let's assume that I want to risk 500 per trade. Well, how do I know what trade size to pick? Very easy. Everything's calculated for you here. That's what I mean by our WebTrader platform and our app helping you with the risk management stuff. So if I put half a lot, I can see that the cost of this protection for 2 days is 545. So man, it's a little higher than 500, right? So now I can just say 0.48, 0.45. And now I see, okay, now I've got it just under 500, 0.46. And there it is, 501.72. Maybe I say, okay, that's close enough. And I say, okay, I'm willing. And in this case, I'm paying that amount for protection. That's already gone once I open the trade. But that will pale in comparison maybe to my potential profit, which maybe I think it will challenge this resistance level up here, which is around 1947. I'm not even going for the highest resistance level. I'm on the 2-hour candles, and there's resistance here and down, here and down, and here and down. And it became support when it was above. So this looks like an important price level. And maybe I say, okay, 1947, just before 1950, I'll take profit. So I'm using the technical analysis to figure my exit point here. And looks like the screen reset on me. The platform sometimes does that. I lost my signal for a second. So it was 0.46. Buy position, 0.46. I wanted protection for 2 days. 501.72, there's what it was. And now I say I want take profit at just before this resistance level here that I drew around 1947. And you see my potential profit is about triple, little more than triple what the protection cost me. So if I'm right even once out of 3 attempts, I'm about breaking even. So 33% accuracy in this type of setup, and I actually have a small profit still with 33% accuracy by, I don't know, $17 or $18. If I can win 50% of the time or 40% of the time or even better, then wow, I'm really in great profit, okay? And I have nothing to worry about. I'm risking the exact amount I want per trade with a nice potential profit. And so if I like it, I buy, okay? Very simple risk management. And maybe the reason, like I said, I choose to do the AVA Protect is because maybe the only other option if I want to buy from here is I think I need to put my stop loss below today's low. So below this line down here, which is, as we said, I would have to have my stop loss about $25 away. And with the number of ounces that I had there, I'd be risking a lot more than what the protection cost me. So it's just a little give and take with strategy. It depends on the setup. If this movement was closer to the support level, I might have chosen instead of the protection to just put my stop loss below the support and risk a small amount and go after my profit on the climb. But because I was further from the stop loss, I felt better with a couple days protection to say, okay, I'll be patient with it. It could push down, it might not, but I'll have a couple days to wait to see if it'll go up, fully protected during that covered time period. And if you're wondering, is my protection about to end? All you have to do is come here and look, and it shows you on the open trade how much time is left. 44 hours and 31 minutes of protection left. And as it gets close to the end of the protection, if then you want to modify the trade, hit edit position, you can add a stop loss. You can add a stop loss at any time. I choose not to put the stop loss in the beginning because I know I'm protected for this time period, okay? And any losses, if it went flying the wrong way, I get all of it back. Any negative floating that's there during the protected time period, when the protection ends, I get all of that back, okay? Any questions, comments? I do see a couple that popped up that I missed, so let me have a look. Frankie, I don't think so, no. It could be different with your strategy. Frankie's asking, is there a preferred time of day to look at the signals? And I would say, depending on your strategy, maybe, but the signals in the morning aren't any better or any worse than the signals in the evening. It's just in the evening, many times, maybe you're looking at pullback movements that have occurred already. And in the morning, you're looking at what are the headlines, and it's the initial moves and breakthroughs that you're expecting on the new information that's coming out in the morning. So your expectation of which way it would move, whether with the signal or if the signal already carried through and you're trying to anticipate what the next move would be, like we saw with the GBP USD, it already carried out So we chose to leave it alone because we didn't want to trade against the direction we thought it should move, but we also didn't want to trade in the direction that it already moved because it already carried out the whole signal. But many times you look even in the evening and it did not carry out the signal yet. And it's still in a good spot to trade on that signal. And we've had that happen in many of the webinars, in fact, that we've done. Good question. Now I see another question. Arthur, you're asking, can we keep the position open unprotected after the AvaProtect expires? Absolutely, yes. As long as you didn't get stopped out during the protection time, and if you did, you get all of that negative back. But if the protection ends and the trade's still running, now you can add your stop loss. And all of that negative floating is added back from the protection. Now you only need to gain back what you paid for the premium, and now you're in overall profit. So you wouldn't even need it to go very far the right way once the protection ended, because you only need to gain back the premium and everything else was added back. So you could even double up, even open a second trade from the better entry point because you're only down the premium at that point. So there are different strategies you can use with that AvaProtect to really give you maybe an advantage in certain circumstances. Alfred, it's more of an art than a science. Alfred's asking how to improve your placement of your stop loss. I think you need to go back to your risk management plan. If you're the type of trader, and I was guilty of it in the past, that as the movement's getting close to your stop loss, you say, let me drag it, and you drag it, change your stop loss a little further away below one more price level, and then it's dropping and it's going to near the stop loss, and you say, let me move it a little. If you're doing that, you're not sticking to your risk management plan, most likely. So to answer that question, where's the best stop loss? It's in the spot that fits your risk management plan and your strategy before the trade opened. And probably, unless the news has changed, probably you should stick with that plan because it made sense to you when you opened the trade. Unless something changed fundamentally to change your mind on your strategy, you probably should stick with the risk management and everything that you planned in the first place to do. And there's no one rule about how far away the stop loss should be. Sometimes traders will trade with a stop loss that's further away than the take profit. What that does is usually increases your win percentage, but now you need to be at a higher win percentage to profit. If each time you lose, you're losing more than what you win when you win. So, but many times you've got your stop loss a shorter distance away and your take profit further, then you don't need to win as often percentage-wise to have an overall profit. But it can go both ways. It's not one way or the other. You can trade in both ways. Well, that moved into profit already. The gold, that's not where I meant to click. I meant to click on trade. Okay, so what else can we look at? Maybe crude oil, right? Crude oil pushed down today, probably bounced back up already. We'll see. If not, maybe it's a nice entry point if you think crude oil will bounce back up. So as we look at the chart on crude oil, and maybe I get rid of some of my lines I've drawn. Look at that bounce right off of the support level that we drew in the last webinar. It hit this area and right back up, okay? And so we see the pull down. If we go to 1 hour candles, we see the pull down that happened with crude oil. Down, 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 especially today. Look at this drop with the hope. This is when the news broke that the peace negotiations might have been actually going well, and down went crude oil. Now here's the normal bounce back up, testing the resistance. If you feel, hey, there's going to be some snags in these peace negotiations, fear is going to come back, supply disruption fears will come back for energy coming out of Russia. If you feel that's the case, then this might be a spot to do a market buy, take advantage of this big drop in crude oil, and just get your stop loss below the support level here, below where it bounced from. And if it breaks below today's low, then you'd say, okay, I'm wrong. But you don't have to risk much, just getting your stop loss below 100. And your take profit could be up here 115, 116, which is not even near the highs that it has reached not that long ago. If we go to 4 hour candles, we see crude oil is up at 130. Okay, so if you're doing a market buy here, putting your stop loss down just below today's low, below 100, you're only risking about $4 per barrel, and your take profit could be, without being greedy, at this resistance level here, that's about $12 up. So that's a 3-to-1 ratio potential profit to risk. And really the fundamental news is probably on your side with that in the bigger picture, with still this fear about war and nothing being settled yet with that really. What drove crude oil up to 130 here, 129 is exactly what is still happening, minus the little positive sentiment today that happened with maybe some hope of peace. So you could, be a cynic and say, I don't think they'll actually work the peace deal out all the way, and buy on crude oil. Small risk to get your stop loss below today's low. You could choose to put it below this support level down here if you want to risk a little further, and maybe a take profit at one of these resistance levels here, or if you're more patient, higher. Okay. I tend not to be too greedy with my take profits. To take profit at a spot that maybe is not at the high that it was at recently, but somewhere just before it. But that's up to each individual trader. So if I wanted to trade on crude oil, then let me lower this down so I can see the instruments better. And let me bring up commodities, energies. There's Brent oil and crude oil. You can trade on either one. Let's click buy. And so in this example, we're saying we're going to do a market move on crude oil. And again, your opinion can differ. It's the strategy that I just want to make sure you understand how to set it up and how to manage the risk with the tools here. So stop loss, I could say I'm going to put it below today's low. If it breaks below that, then okay, I'll admit I'm wrong. Let's say that's my take on things. So it got down to 98.5. So if I put my stop loss at 98, and I put my take profit, not to be greedy, not all the way up here at this high, but at this one here, this resistance level, let's say at 115. Then I say, how much am I willing to risk? Again, let's say it's 500. If that's what it is, I know I'm willing to risk per trade. So now I can adjust my trade size. And I see a lot size of 0.08, which is 80 barrels. Risks about 500, 496, with a potential profit, not quite double, but much better potential profit than risk. If I like it, I've got it set up and buy. And you'll see there's no AvaProtect on crude oil. AvaProtect is available on gold, silver, and the FX pairings. Okay, so we've got some examples here of different reasons for making moves, but always trying to consider the fundamental news situation and then look at the technical analysis and try and work it out so that it's in your favor. And one we passed on. The GBP USD, we were dead on the direction we thought it would go, but we missed it. Ready made that move. These look like they're just getting ready to make the reversal moves. And so the fundamental news maybe helps support it. And so you take your shots where you think it makes sense. Any questions, comments before we end things? We've been going for a good 40 minutes. I think this is a good spot to stop. I see another question. So there's actually a few that popped up. Can we keep the position open unprotected? I already answered that. How can I improve stop loss? We already answered that. Alfred, you said thanks. You're welcome. Can I trade with stop loss and take profit without AvaTrade? Without AvaProtect, I think you mean. Yes, and I just showed an example of that. We put stop loss and take profit. We didn't use AvaProtect. Don't have to use AvaProtect if you don't want it. Arthur's asking, do I believe in the concept of an instrument or an asset being overbought or oversold? And in some circumstances, it makes sense. Certainly, it can make sense. If let's say that the opposite was happening right now, and reports came out that there started to be an oversupply of crude oil, that maybe OPEC was increasing production and the crude oil supplies were rising, but the price of crude oil was still where it is now. Probably we'd say maybe crude oil is a little overbought right now for those market conditions. And so that's the sort of thing where you can start to believe in the concept that you can maybe start to see when you think something's overbought given the current circumstances or oversold. Now, I just made that up, right? OPEC did not say they're going to increase production any further than they already have, as far as I know. So if you just joined us and you heard that segment of what I'm saying, I was just giving a made-up example. But certainly, I believe in the concept of having a feeling about whether something's overbought or oversold in terms of the current price not matching maybe what you think the fundamental outlook actually is at the moment. Good question. All right, everybody, I think we'll stop at this point. Thank you for the participation, the questions. It's really helpful. For those who aren't asking questions, it's okay. And I think other people's questions help give information that maybe you weren't thinking to ask, but in the end, you learned something from it. So thank you for attending. My next session will be Thursday at 11 a.m. UK time. And those are the normal times that I do my sessions, barring any unforeseen changes in my schedule, which happen on occasion. But Tuesday evenings, like now, and Thursday late morning, and I'm talking UK time. All right, everybody, thank you for joining. Till next time, good luck with your trading.